Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, July 17th, 2018. It is 11 o'clock Eastern Time exactly as I start this video, so I wanted to wait, let the dust settle, see how things shook out here, and I think it's a good time to do an update on the market. So let's dive in. The big news last night, if you're listening to this video, you probably follow the markets and know that Netflix took it on the chin after earnings last night. And that dragged the cues and the market down with it. And then we've had so far a nice snapback rally. So let's take a look at the charts and see if anything's changed and where we might be headed. I'm going to start out with the futures, then we'll roll into SPY and QQQ. Maybe briefly look at Netflix, time permitting. Keep this video relatively short. So the big news today is the snapback rally. Let me try to show that to you on a 1 minute chart real. Okay, well, actually, the big news was, of course, initially the gap down, then the snapback rally. Here's QQQ. This is a 1 minute chart. So right here, you can see the daybreak line, this yellow line. That's where we closed yesterday. So there's a gap down, and so we had a big gap down and an equally powerful rally back up, right to backfill the gap almost perfectly. If you guys trade, you know gaps are like magnets. So we can look at this as glass half empty or glass half full, and most people are going to do it no matter what their depending on their bias. If you're bullish, you say, "Oh gosh, there's another, bears got burned, dip buying opportunity, and we're going to new highs." And if you're bearish, or short, you want to see this is actually can be viewed as a very good thing, and that is because now if we reverse from here, the Qs and SPY backfilling those gaps have left no unfinished business behind. And if you know what I'm talking about, a lot of gaps are very often backfilled sooner or later. So if we backfill this gap in reverse, no unfinished business, so the Qs are clear to take the next thrust down. So that's one way to look at it. But let's see what happens. And again, let's get back to the charts here and start with the futures, and we'll go to the SPY 60-minute and maybe daily charts and QQQ. Okay, so here's ES, and again, bulls will claim victory on this snapback rally. Bears will claim victory. Here's what I see, trying to be as unbiased as possible. There's a couple short trades. I'm personally short, made that clear. If you remember the site, we have a short trade on QQQ right now, and small caps, IWM, both profitable. And here's ES. So this is what I'm looking at on both ES and QQQ. These are the 60-minute rising wedges. This was the last rising wedge. This is the current rising wedge. They look almost identical. There's your breakdown and initial kickback rally. So again, you want to look at it as glass half empty, or at least that there's more downside. Take a look at this. We had an initial thrust down, and remember, nothing goes straight down, especially with earnings seasons. You're not going to see. I don't believe you'll see the market collapse or do anything big to the downside or upside because the market's already elevated quite a bit. It's, especially the QQQ, NASDAQ 100 trading near all-time highs, valuations are high. So I think things will go in somewhat of a holding pattern. You're not going to see any huge moves. I went over in the video yesterday, showed you when all the top components report. Netflix started the party off last night. And then we have the rest of the big market leading FANG and FAME stocks, FAAMG. That's the term I use. FANG is the old term. And again, they're all, Netflix is one of the top 10 components. So well, here's what I wanted to show you. So there was that initial shot down, and there were the dip buyers stepped in. That's, dip buyers come in, and, dip buying works in an uptrend. That's what you want to do. But when an uptrend ends, they're, like Pavlov's dogs, they're conditioned to step in and buy every dip. And you can see, as I highlighted here, that is about an equally impulsive move up as this one so far. So let's see what happens. Nothing so far out of the norm. We've already had a correction. We've had we hit our on QQQ. We hit our first target today, almost to the penny. We gapped up, gapped a little bit above it, pulled back. That was expected. It was drawn in the scenarios. That's why I list multiple targets. Each target is an area I expect a reaction, and then we'll probably continue on to the next one. I'm not going to go over those targets because this is a public video, but here's ES. And again, you can look, here was another, there's a couple. Look at these, again, as we zoom in, and I know it might be hard to make out on the YouTube video, but you see these impulsive dip buying on the way down. And here was another one. Again, this candle, if you really zoom in, I'll try to do it for you here. You really zoom in, you can see that those candles are comparable right here. This big green candle right here, this big green candle right here. You can see it. I'd have to box it in for you, but I think you get the point. You can again look at your own chart. This is a futures chart, the S and ES, E-minis. There's today's candle. And so will it be one of these followed by the next leg down, or will it be a move up to new highs? Maybe even coming in back test this wedge at higher levels. It's certainly a possibility. I don't know. We'll wait and see. Again, earnings season is upon us. We still have some, all the big, other than Netflix, the big companies are still set to report. So if I extend these divergence lines like this, it just tells us there's certainly the potential to push up to even take out the recent highs and still have a divergent high. And I showed you that. Let's actually just jump over to QQQ and we'll look at it now. Here it was. So back there, this is SPY broke down earlier from its wedge on that previous wedge. And again, I'm going back. If you can see the dates down here, this is June. And QQQ was more resilient. It broke down, back tested the wedge right here, and then had a kickback rally to make another new high. Now, like then, or like now, that first high was a divergent high here. Let me draw it out with a different line. Here we go. So there you had negative divergence at this high, and that's when the correction started, but we just happened to have a kickback rally that went in and extended those previous divergences. So, and as you can see with these indicators severely lagging at this point, severely lagging, they're way down here. I can draw these lines anywhere all the way up. Ideally, keep it at this slope. Here's your first high. There's a lower high right here. So there it is. So we have the potential to make a marginal new high. And, I would honestly probably put coin toss odds at that. I'm not going to try to game it. I can tell you that right now. It's like picking up nickels in front of a steamroller. I'll stay short. I'll just give my short some room. And for the possibility that we have something similar here. Personally, I don't think it's going to happen. Why? Well, number one, it just happened here. Markets usually don't repeat exactly, but again, that's only one variable. We'll see. Again, I'm open to all possibilities, but the important thing is we look at these charts. I just showed you a minute ago. SPY well below trend, and here's QQQ or NQ, the E-minis, well below trend. This is a well-defined trend line. There's your divergent high, and so we can sit here and guess all day long. Are we going to go up a little more, make a new high? And look, anything's possible. Do we just keep on rocking through new highs and burn through these divergences? Is it possible? Yes. Is it probable? Not in my opinion. I don't think so. And I'll get to this in a second here. I'll tell you now. So Netflix, let's just look at what happened with Netflix. Netflix, as was indicated, the chart was clearly bearish. I've covered this one recently. Quite a few people on the site took it as a short trade. I couldn't add it as an official short trade only because the history on Netflix with these gaps, all these big gaps here, I believe, are probably earnings induced gaps. And the last two big ones back here and back here went to the upside. However, there wasn't a clearly bearish chart pattern at the time. This point in time, you can see we had a well-defined trend line. We had rising wedge right here, negative divergence. That wedge broke down, and that pushed on and made an extension or even larger divergent high. So we had, again, you can see it down here, strong negative divergences at that point. We had a big correction. That was a double-digit correction right there. And this time around, we were walking the trend line, divergent high, boom. So the technicals have played out. Now, where am I going with this? Well, I think there's a possibility this can set the stage. This was one of the most beloved stocks on Wall Street, one of the fangs of the FANGs, the Netflix, and it now shows that these multi-billion-dollar mega cap companies, Netflix is 172 billion. Sure, it's not as big as Apple and Alphabet and Microsoft, but it's one of the largest components in the Nasdaq 100, one of the largest stocks in the world, and it can show that in a given day, it can drop. It was down, oh gosh, what was it down at the lows? I don't remember now. It was much more than now. It's had a little snapback rally, down about 13, 14% or so. And that might put some jitters in those people in the rest of the beloved, overowned, overloved stocks like Facebook, Amazon, Alphabet, Microsoft, that hey, as earnings comes up, all they have to do is miss. They've guided well, they've usually beat expectations, but one little miss, boom, the market, these are momentum stocks. And again, they're over-owned and overloved. That means there's a lot of longs, much more longs, there's low short interest. And this is what happens when there's a rush for the exit. So anything can happen. The week's not over, the day's not over. But as of now, this is everything you want to see in a breakdown on a stock. It is impulsive. It is well below the trend line. You have that impulsive selling, high volume. You look at a weekly chart, there's that same rising wedge, and here's your weekly candle. Is it possible? I think at best case scenario I see for Netflix is maybe it comes back in by the end of the week or next week and back tests this wedge from below, which would be a great shorting op. There's negative divergence on the weekly time frame as well. And like I said before, I think this one comes back ultimately in the coming months here to revisit and test this long-term uptrend line, and that's quite a bit below. So there's a lot more downside there. And again, it comes into all the other FANG stocks. I've done an extensive video coverage on those the other market leading stocks, the top 10 holdings in the QQQ. So I'm not going to do that right now. There's no need. But all the charts are very similar. They all have these same negative divergences. Most are right at or above trend. Some are even back testing the trend line, like Facebook, for example. We had that one. See, here's a trend line. Already broke trend. It's back testing both this white minor trend line and this longer term, more significant trend line from below. So, and the divergences are in place. So, whether investors want to ride these things right up to earnings, whether they pop the day after or so, these charts are clearly bearish. I think they'll most of these other FANG stocks and the Nasdaq 100 will follow suit here, and we only have a few more weeks because earnings season is now underway. So that's that. I showed you the those are my thoughts on, again, will investors, as these other big names start to come up to those earnings dates, are they going to unload, lighten exposure? I would. If I was an institutional fund manager and I've been able to milk these gains, but I had an overweighting position in these market leading stocks, knowing that it's going to be a crowded exit, just like crude oil recently with the big sell off, that was an overcrowded trade. It had a record high, a long exposure with the institutions, and they're trying to scramble, and everyone's trying to get out of the exits at the same time. So we'll see. All right, enough on that. Charts are the charts, and that's all we're really focusing on right here. And this is QQQ, 60-minute chart. There's your uptrend line, breakdown, little kickback rally so far. We've closed the gap by just a hair. We're up 0.7%, so we're virtually flat. And the negative divergence is still very much intact. And again, just like NQ, we can extend these lines. So there's certainly the potential, if QQQ wants to have a kickback rally here, test that wedge from below, maybe jump back inside it like it did on the last breakdown. And SPY, looking a little bit stronger. Let's see if I have a different chart. Okay, here's a different board on SPY. This is a 60-minute time frame like we were just looking at on NQ. And there's your uptrend line, there's your breakdown, kickback rally, and here's your divergence. You can see the negative divergence. And of course, there's room again on SPY, just like ES, to extend those divergences. So maybe, maybe not. I don't know. That's one thing leading up to earnings season. And again, look at these charts, but these are the times you want to go short when you see these 60-minute divergent highs. You had a divergent high there. There's your divergence. It's wash, rinse, repeat stuff. Go long on the divergent lows or cover your shorts. There's a divergent low right there, divergent low. So that's SPY. So we can sit here and hash it around all day long. Are we going higher or lower? All I can do is trade the charts. I can try to guess all day long who's going to beat earnings, who's going to miss. And more importantly, I always say this, it does not matter what the earnings report is, whether they beat or miss, or even what the guidance is afterwards on their conference call. It's what is the market's reaction to that? Because I've seen companies blow it out of the water and then sell off, and I've seen companies miss expectations and then turn around and rally. So that's the important thing. Let's see what happens here. So far, we know what's happened to Netflix, and again, it has a way to go before even getting back to that trend line. Okay, and we'll just wrap up quickly with the bigger picture. Big picture on SPY, 279.80. This is just what is this? The fourth test this year. Here, that's certainly a key level to watch, and we're testing it once again. So there it is. Look at all the tags of this level here. Every time we failed. does appear to be pushing up. This is a pretty resilient. So we might pop. And I actually, you know what? I'd even favor a pop. It would help the bearish case right now to see it pop and then fail. Now, obviously, there's two things: you pop and you keep going, that's bullish, or maybe a back test and then run up. But we've had so many attempts here, and to help clear out some short interest right now, and to suck in some little increase the bullish sentiment and pull in some more longs. It'd be nice to see a breakout and then a failure of that level, and that would be pretty bearish to me. But either way, let's watch. It's a battleground. But again, with earnings on deck, don't expect fireworks. Even if we break out, even if we pop and then fail below it, or even if we reverse here, you got a bunch of other market leading stocks on deck to report. So I don't think we're going to see a tremendous amount of movement, anything really big in the market until at least a couple of those big FANG stocks, especially the tech companies, report and get things out of the way here. There's QQQ, same story, divergent high. The trend, again, when I speak of near term trends, intermediate, and long term trends. That 60-minute chart we're living in, or that we started with, I should say, is the near term trend, my near term outlook. I have near term price targets on those, the QQQ in particular and IWM. But we come out here, this is intermediate term to longer term stuff. And the trend is still bullish. I have this trend indicator. The 9 EMA is still above that zero line. MACD or the PPO seems to be rolling over. You can see that line turning down here, and we have a divergent high. So, yes, the trend is bullish, intermediate and longer term. However, the outlook, my intermediate term outlook, is bearish, and that's what it's all about. Technical analysis is a dime a dozen. Anybody can tell you what the trend is, what happened yesterday. That's what you're going to read about in the Wall Street Journal or turn on CNBC. But I focus on the right side of the chart, hence the name of the site. And that's anything to the right of current prices. So I see these divergences building. I see this, this momentum indicator making lower lows. That is what negative divergence is. Prices making a series of higher highs, and the momentum indicator is making a series of lower lows. So if we do reverse soon, whether we pop to a marginal new high or not, and then we turn down, that will have confirmed or even strengthened these divergences. You can see it here. Here's a divergence line right here. These divergences are starting to steepen, and it's the same divergences that have been building all year so far. And that's it. So there's my the near-term outlook. Let's watch what happens. The near-term outlook to me is still bearish, as is the intermediate-term outlook, despite the current trend, if that makes sense to you. All right, so we'll see what happens here. The day is young, and so is the week. Let's see how we close the week. It's always important to take a look every now and then at the weekly charts and watch those key levels. QQQ is still well above trend on the weekly time frame, but SPY, as I've mentioned, broke this yellow trend line back in the second correction earlier this year and caught support on this long-term primary uptrend line. So those are the levels we have to watch for the bigger picture. And right now the markets are comfortably above those levels. So there it is. So just expect over the next couple weeks more of the same, meaning these opening gaps that are induced by big market participants reporting. And again, I covered all the dates of the top 10 components in the NASDAQ 100 when they report. And if use those dates, keep that in mind, especially if you're swing trading or investing in any of those individual stocks. But even if you're only trading the indexes, which you have the diversity and safety in numbers, but you're not prone to those big gap downs like we saw today with QQQ being down over 1% and then ripping back up. And that was all due to Netflix. And again, Netflix, as I just told you, is only what did I tell you? QQQ, let me look at my list here. Netflix is only a $172 billion company. Apple is a $900 billion company, almost $1 trillion, as is Amazon, almost 900 billion. Alphabet, Microsoft, all that good stuff. So they have the potential to have a much larger impact after their earnings. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it. And as always, if you like it, please give it a thumbs up on YouTube. Have a great day.